Well, good morning. It's me, Kenny Polcari, your host of the party, and today is Monday, August 12th, and here are the things that you need to know. Well, stocks took back almost all of the losses suffered on Monday. Second quarter earnings have not been so bad, by the way, although revenues are a little bit weak. The consumer is finally saying enough is enough. Focus this week is going to be on the latest inflation data, the PPI and the CPI. And what do we have in dinner tonight? We're having the spaghetti with garden vegetables. It's like a primavera. It's so easy to make and so delicious. You won't stop eating it. Okay, so look, stocks rebounded into the end of what was a wild week, right? That saw stocks plummet on Monday, only to take it almost all back by Friday. Sentiment went from near panic to near jubilation on Friday. Well, jubilation might be a bit exaggerated, but it is what it is, and you know what I mean. The Dow rose 51 points. The S&P added 25 points. The Nasdaq was up 85 points. The Russell fell by 4 points. The transports lost 100 points, or 1.68%, and the equal-weighted S&P rose by 11 points. There has been no shortage of drama since the month began, right? The month of August. First, it is a seasonally weak time of year, we know, right? Then we had the yen carry trade that blew up, causing all kinds of calls for an emergency Fed meeting. Stocks plummeted, leaving investors more worried about what the Fed was going to do next. Then we got the next round of economic data points starting with this week. Then we got the Mideast and how will the presidential election play into all of this. We're almost through second quarter earnings, and so far 78% of them have beat, a bit better than the average, right? Earnings growth has come in at 11.5% versus the expected 8.9% as we entered the season. The majority of the beats, though, were a result of controlling the expenses, right? Think layoffs, capital allocation, etc., given that only 58% of the companies that have reported actually beat on the revenue line. And that speaks exactly to the consumer. And from our perspective, we're saying enough is enough. All right, let's be honest. Can we just for a minute, let's just think about this. Under the Biden-Harris years, they've been a disaster for the consumer. Goods and services are up 22%. Food is up 27%. Goods, ex-food and energy, are up 16%, while services are up 20%. Interest rates are up 500%. Recall they were zero when they moved into the White House. Mortgage rates hit a high of 7.5%, although they are now retreating back to 6.4% as we hope the economy is kind of come in for a soft landing. Now, while we had higher prices jammed down our throats, that is beginning to change. Pricing power that companies had appears to be easing a bit, and consumers are pushing back because the consumer is completely strained. Savings are depleted, and wage growth is slowing. Expect to see more data about this over the next 6 weeks or so to either confirm or deny these facts as we move into the September Fed meeting. The focus this week brings us the latest inflation data points and expected to be a bit better. Tuesday brings us the PPI month over month up 0.2%. Ex-food and energy expected to be up 0.2, which is down from 0.4, so that's better. PPI year over year of plus 2.3%, down from 2.6%, and ex-food and energy of 2.7%, which would be down from 3%. Wednesday brings us the CPI month over month of up 0.2%, which is up from negative 0.1%. Ex-food and energy up 0.2, which is up from 0.1. CPI year over year is expected to be up 3%, while ex-food and energy is expected to be 3.2%, down from 3.3. Later in the week, we're going to get retail sales, Philly Fed business, industrial production, capacity utilization, housing starts, and building permits. All of the major groups in the S&P advanced on Friday, with communications out front up 0.8%, with industrials carrying up the rear at plus 0.2. All the other groups fell somewhere in between. Bonds rallied, the TLT ETF up 1%, the TLH ETF up 0.9, leaving the 2-year yielding 4.05% and the 10-year yielding 3.94%. This after a couple of weak bond auctions during the week, in the sense that the Fed was going to be making aggressive rate cuts by year end. On Monday, many were demanding that the Fed cut rates by 150 to 200 basis points, while by Friday, they pared those bets back to 100 basis points, which, by the way, I still think is too aggressive. A Bloomberg survey suggests that the majority of economists surveyed think a September cut of only 25 basis points is warranted, which flies in the face of the big investment bank analysts that are calling for a jumbo cut, defined as somewhere between 50 and 75 basis points. The VIX, which is the fear index, continued to decline on Friday, leaving it sitting just atop the 20 line, down 68% off the Monday high, but still 60% above the July lows. This morning it is up 34 cents at 20.71. Oil, recall last week that it busted up and through the long-term trend line at 76.50, which had proven to be a real sticking point. But this morning oil is up 77 cents at 77.62, and it appears ready to kiss the intermediate-term trend line at 78.20. The recent strength in oil can be attributed to a couple of things. First, it was well oversold and needed a bounce. And second, the rising risk of the conflict in the Middle East. Oil remains in the 76.5, 78.80 trading range, and any surprise moves in the Mideast are surely going to send oil up and through that resistance. Gold is trading up $9 at 24.81 this morning after trading down last week, testing the trend line at 24.25 where it held. Gold traders are awaiting this week's inflation data. Further signs of weakening inflation will set gold up to most likely retest a July high of 25.37. U.S. futures are mixed this morning. Dow down 12, S&P's up 3, Nasdaq's up 30, and the Russell is down 8 points. Expect volatility to remain elevated this week as we get more inflation data. It is expected to decline, so two things could happen. If it's worse than expected, meaning it rises, suggesting that the Fed stands pat, then watch as stocks begin to trade off. But if it's better than expected, meaning it's weaker, right, then watch as traders demand a more robust cut, right, more than the 25 basis points that the economists are expecting. Recall last week we heard from two Fed heads, Barkin and Schmidt, and both reiterated that they are not in a rush to cut rates. European markets this morning are mixed as well. France is down 0.2%, while the FTSE is up 0.4. European markets, like U.S. markets, continue to try and shake off the hysteria from last week. UK inflation is out on Wednesday, and many are asking if this report will support any additional rate cuts by the BOE. The S&P closed at 53.44, up 25 points on Friday. Global markets are struggling to create stability as they all prepare for a week full of U.S. economic data that will shape the Fed's next move, or hopefully give us some clarity. And while there appears to be some relief from last week's volatility, do not dismiss it just yet. Markets will remain on edge as we move through the next 3 weeks of August. Many participants are on vacation, suggesting that volumes are going to remain subdued, which only exacerbates any move up or down. While I remain a long-term bull on stocks, investors are frazzled. Last Monday's sell-off caused all kinds of internal technical damage to the market, and that needs to be repaired. And that's going to take some time and will surely cause markets to test lower again to see if the lows of Monday hold. That's at 51.16. Today, there's no economic data to speak of, so expect the focus to be on the upcoming PPI and CPI reports on Tuesday and Wednesday of this week. Remember, we are in a seasonally weak time of year for stocks, August through October, so patience remains a virtue. In the end, be confident in your portfolio. Become a bit more defensive, and that includes sectors like consumer staples and utilities, which are boring. But if tech names or other names get significantly oversold for no other reason than there's nervousness, then take advantage. Make sure you know what you own, and in times like this, talk to your advisor if you're concerned. Feel free to call me at any time because I'm happy to talk markets. 212-381-6194. Okay, so what do we have for dinner tonight? This is so simple. It's just spaghetti with your garden vegetables. It's kind of like a primavera, but a little bit different. So I say it's summer, and you probably have a big, beautiful garden producing some gorgeous vegetables. And if you don't, just run out to the store and buy what you need. This is simple. We made it on Saturday, and so here's what you need. You need a pound of spaghetti. You need olive oil, salt and pepper. You need 2 shallots sliced. You need 2 garlic cloves sliced. You need 1 box of cherry tomatoes sliced in half. You need broccolini cut into bite-sized pieces. And you need the asparagus flour, just the tip, right? And of course, you need the fresh grated Parmesan cheese. You want to bring a salted water to a rolling boil and then put it on the back burner, leave it on medium-low until you need it, right? This way then you don't have to worry about bringing it up to boil. It's ready to go when you're done making the main dish. Now in a large saute pan that's going to accommodate the pasta, you're going to add 3 turns of olive oil, right? Next you're going to add in the shallots and the garlic. You're going to saute for 3 to 4 minutes. Now add in the bite-sized broccolini and the sliced cherry tomatoes and saute that on medium-high heat for 10 minutes or so. The tomatoes are going to start to kind of explode and melt and produce the juice that becomes the sauce. Now add in the asparagus flowers and season it with salt and pepper. Turn heat down to medium. It allows the asparagus to cook. When you're ready, add the spaghetti to the pot and cook it until it's al dente. Strain the pasta, always reserving a mug full of water. Place the spaghetti in the pan and mix it well. Add 1 handful of fresh grated Parmigiano cheese and then mix it again. You want to serve this immediately, always having more cheese on your table for your guests. When I tell you, once you have this, it is a delicious dish. You'll make it frequently during the summer as long as you have all the fresh vegetables. Now, today is Monday. The sky is blue today. The sun is out. Maybe today's going to be a good day for the markets. Until tomorrow, take good care.